All right. Hello, hello. Apologize for being a couple minutes late, but we had a little technical difficulties and we can't waste 1 minute because this is Back Around the World. So it's Mark Yusko from Chapel Hill. Back Around the World 2025 in review. We're going to go back through all of the presentations over the course of years. So we got to zip through 500 plus slides. Here we go. All right, a year ago, everyone was celebrating. Everything was hitting all-time highs. The Doge boys were rocking DC, talking about huge cash savings, lower rates, and tax cuts. Okay, so 2025, we came in and we did the surprises in 2024. We'll review those in January 2026. Oops, I'm looking. There's always three typos. So that should say 2025, obviously. Then in February, we started talking about tariffs. And it seems like all we did for the first half of the year, well, all we did do for the first half of the year is talk about tariffs. Tariffs everywhere. Dan won't stop to think. Tariffs everywhere. Is the investment environment starting to stink? Tariffs everywhere. Will the economy sink? Tariffs everywhere. At this point, we could all use a drink. The never-ending story. Are the Trump tariffs terminated? Finally, in the summer, we took some time off from tariffs. And then we talked about the relentless summer melt-up. Took kind of September for topical webinars and introduction of some new ideas. And then willing suspension of disbelief. Is it really different this time? Some more topical webinars and the Morgan Creek Dislocated Hospitality Fund introduction. And now today we're back around the world. So, we will talk about the 25 surprises next January. The 25 surprises this year were brought to you by House Stark. I asked ChatGPT to give me the consensus and a bunch of hallucinations on the left-hand side, a bunch of spelling errors. But generally speaking, it got the data right-ish. So a bunch of things on the right that we'll talk about next year. And then trade wars, inflation, rising rates. Oh my, those are the biggest fears. So we came into February and, all of a sudden the Trumpster started talking about tariffs and that he was playing 3D chess and that he knew how to win trade wars because they were easy. We quoted Samuel Taylor Coleridge, water everywhere, nary a drop to drink. Trade wars are good and easy to win. Tariff is a beautiful word. I don't know what he's thinking. As history has repeatedly proven, one tariff begets another and another until you got a full-blown trade war. No one ever wins. The consumer always gets screwed. From Mark McKinnon, kind of different view. The benefits trade tariff are visible. Union workers see they're protected, in quotes. The harm which a tariff does is invisible. It spreads widely. People don't have jobs, don't see it. That was from Milton Friedman, pretty smart guy. Protectionism, misnomer. Only people protected by tariffs, quotas, and trade restrictions are those engaged in uneconomic and wasteful activity. Free trade is the only philosophy compatible with international peace and prosperity. Truth. Let's be clear. Tariffs are a tax. They create winners and losers. Yeah, if you're uncompetitive and government tax revenues can go up a little bit, okay, great. But there's a whole host of losers, from exporters to the domestic consumers, because they actually pay the tariffs, contrary to Trump's popular belief. Look, tariffs were widely used in the 1800s, and Trump kept talking about this, but that's because there was no income tax. The only source of government funding was tariffs, and governments were very small. So Hoover wasn't as in love with tariffs as everybody else. But infamously, he did support the Hawley-Smoot tariff bill, which might have been the dumbest thing. I mean, that's a big statement, the dumbest thing in the history of government, but it's pretty dumb. So tariffs have been coming down. Life was good. We had the roaring 20s. And then bam, we do Smoot-Hawley Tariff Act, and equities have a little crash. Tariff man was back. He, wanted to put on the tights. In 18, he said, hey, I'm going to reshore American jobs, and there's going to be a less big China surplus. Not so much. China's trade surplus went up 3 times. let that sink in, 3 times. And markets don't like tariffs. And the problem is we import more than we export. So we have to send our dollars abroad. We have to buy more goods. Tariffs will never fix that. They have never been a good idea. They never will be a good idea. They will always escalate into a trade war, and there will be no winners. Now, the Treasury Secretary said, oh, but we'll bring in substantial revenue. Okay. I mean, yes, $176 billion is not an insignificant amount of money, except when you're spending multiples of that every year in excessive spending that you have to print. So it sounds like a big number, but it's actually not. The real problem is labor productivity and incomes always go down in higher tariff regimes. Okay, so there is no evidence of any place on the planet where tariffs are a good idea. Now, the majority of tariffs in 2018, most people were against them. But now about half support because of the propaganda. So there's been this perception created that tariffs are unfair and that everyone else is charging tariffs and we aren't. Well, that's not exactly true. We'll show some data on that. But Trump threatened China, but really it ended up being more about Mexico and Canada, which don't seem to be real problems. Reciprocal tariffs are even worse in theory if you talk about VAT. The problem is VAT is not a tariff. It's a use tax or a consumption tax. You get something for it. So as usual, Western press misses the point. There's never been a time when tariffs led to increased globalization. It just created more advantage for China in trade, which we'll talk about. So China dominates the export markets. They toppled the EU leaders, Germany, et cetera. And yet Trump targets them for tariffs. Okay, but let's think about this. Tariff man is back. He wants 1930s level tariffs. But as has been shown over and over and over again, no amount of tariffs will ever reverse the trade deficit. So long as we are a rich nation that doesn't produce very much and we want to buy cheap stuff, which is not a bad thing. It's good to be a rich nation and it's good to buy cheap stuff because everybody can have a higher quality of life. Comparative advantage, 400-year-old technology. So the 25 tariff plan focused on the U.S.-China trade imbalance. But why is it different this time? It didn't work in 18. Why was it going to work in 25? So he said, all right, well, I'll put tariffs on steel and aluminum. That'll hurt China. Well, except it won't because the imports don't come from China. They come from Mexico and Canada. And what steel shows is that industrial socialism is and always has been a bad idea. So China said, fine, you guys don't want to produce steel. We'll produce it and we'll produce it really cheaply and we'll dominate global trade because of it. And we'll increase our GDP per capita because of it. And the U.S. was comfortable exporting our work and our pollution to China. Fine. We got something for it. We got a huge current account deficit. They got a huge current account surplus and a weak renminbi. So we keep talking about how they've been manipulating their currency. Well, we helped them manipulate their currency the way they want, which is lower, not higher. You know, Trump is always talking about that. Yet here we are in a dollar crash, which we'll get to in a little bit. So the Mexico-Canada tariffs were delayed. They were just an assault on the automakers because people were cheating by sending the cars to Canada and Mexico and have them assembled. U.S. profits follow exports. Very simple. The more exports, the more profits. That's actually usually the way it works. The bigger your markets. Globalization will be less good. The economic data was not helping the tariff case. Inflation was up, spending was down. Consensus was that growth would be higher, inflation would accelerate, and the spending was kind of confirming that. The problem was central banks were cutting rates like there was a recession, not an expansion. And the GDP numbers tumbled and actually went negative in Q1. So we're in the third great bond bear market in the sixth year. The problem is, as rates rise, the government budget deficit and the government debt becomes an increasing burden, which is going to slow growth and make people less rich. So the Fed chair shapeshifted to a dove saying, I can fix it. I can fix it. I'll just lower rates. Well, he did lower short-term rates, but long-term rates went up. So it didn't work the way he thought. The bond markets were basically telling Jay Powell he chose the wrong button, and he's making a policy error like the 1970s, stimulating into a recession, and we're going to end up with a double pump of inflation. Now, bond market had been getting pummeled with all the threat of tariff, and had given back all of the gains from last summer, and which it had on anticipation of Trump coming into office. And basically everybody sold just in time for the DeMarc 13 count, and literally on the nose in the middle of February, middle of January, bonds started to rally almost to the day. Now, the Economist basically said, why would anyone invest in any place except the U.S.? Well, I mean, valuation might be one reason if you looked at how overvalued the U.S. was relative to everything else. But over the last 2 years, they were dead right? I mean, over the last 2 years, there was no other place to be. It was the best S&P 500 period in history. Literally no one, I mean, the least number ever, no one thought the stocks would ever go down again. Portfolio managers had their highest net exposure ever. Just let that one sink in, right? People have been managing money for a long time, and they had their highest net exposure ever. And literally no one was buying any form of protection. So what you'd usually expect to happen is stocks started tumbling, and they tumbled and gave back, all of the MAGA surge, and actually hit extreme fear, which is a pretty good buying signal. But extreme fear worked like clockwork, the green arrow, and we rallied a little bit in mid-January, but then we kind of hit this resistance point and went flat. Now, part of the problem we have is this faith in AI is, I say, rivaling the dot-com bubble back then. Now I would say it's exceeding the dot-com bubble. I've never seen anything like this in terms of what people believe LLMs can do, because it's really not AI. It's really not intelligence. It's a model, and it's a good model, and I like it, but it's just one little tool. And people are overweight equities. NASDAQ adjusted for M2 was back to the 2000 peak. The Mag 7 was bigger than entire countries. NVIDIA was priced for perfection, and then DeepSeek came along. And DeepSeek kind of whacked them a little bit. The dollar looked like it was rolling over. Dollar always rallies around financial crises and MAGA elections, because Trump likes to talk big about the dollar, but then it ends up going the other way. So Goldman told everybody the trend is your friend. And so hedge funds got super bullish. When everybody's bullish, that usually means the dollar is going to crash, which it did. And you got to keep the 24 move in perspective. Yes, it was a big move on the left-hand side, but it was about half as big as the last time after the lockdowns in 21. But like clockwork, as soon as Goldman issued the buy signal, the dollar rolled over. Now, oil I love this. Every year, EIA says the same thing. Oil prices are going to be dead flat because supply and demand are going to be in balance. Everything's great. Well, oil prices had been moving higher essentially since Trump took office. It wasn't a big move, and we needed to regain the 200-day moving average. Energy stocks, on the other hand, were so out of favor that we said maybe it was a good time to buy. And they had been so oversold in December, it looked like a classic double bottom. What is a classic double bottom? A classic double bottom is when you have a bottom with lower volume. So you can see the bottom in November was with high volume, then the bottom in December was low volume. So that was usually a pretty good time to buy. MLPs we love because they just generate cash flow and they just look like a thing of beauty. Germany found out the hard way that trade wars are not easy to win. They tried to clamp down on Chinese imports and their economy quickly went into a full collapse. Because if you think about it, Germany's economy is entirely, not 100%, but pretty much entirely dependent on selling machine tools and cars to China. I mean, not just China, but pretty much the rest of the world. So they need a weak euro and they need not to piss off their largest buying partner. So Ms. Lagarde said, I can fix it. I'll just crank the money printer back to maximum burr and I will weaken the currency. Okay. The problem is the currency was weak and it started to strengthen. So the exact opposite of what you want if you are an exporting nation was starting to happen. So on the flip side, European stocks, which had been dead money for a year, suddenly showed signs of life. Even the car companies, which despite the rhetoric, Chinese economy was booming, so they were buying cars. So the ECG cuts should have hurt bonds, but instead bonds did great and banks went crazy. So China equities, they had given back all of the last 20 years returns, sitting at a 30-year low. Now, the weird thing was, if you look at the red bar, their earnings growth was significantly higher, double Europe, not quite triple the US, and yet the US market had all the gains. Europe was in the middle. That makes no sense, actually, unless you're starting from a place of overvaluation, which is not where Chinese equities were starting, and could argue that the US was. No one was talking about the fact that China had beaten the S&P in 24, and China was off to a rocky start on the trade rhetoric in 25. Media said it'd just be a matter of time before the failed plan tanks the Chinese markets. Deeper analysis said, maybe there's a method to their madness. They were selling treasuries. Now, why would they be selling treasuries? Well, they don't want to get paid back in a worthless piece of paper. So China sees what's happening to the U.S. debt and says, you know what? You need me more than I need you. So lower rates in China, and particularly lower interest rates in China, means the PBOC could step up liquidity injections. Well, the PBOC then has lots of capacity given how cheap the renminbi was. Well, who's laughing now? Maybe the weak renminbi was all part of the plan. If they want to sell goods, they want a weaker currency. Chinese equities bounced nicely off the 200-day moving average, super cheap, like only Brazil was cheaper. A shares, they didn't bounce quite as much, but that's because of the SOEs aren't quite as competitive as the tech companies. Tech stocks, they were cruising, and yet alligator jaws, dragon jaws, they were super, super cheap relative to U.S. tech stocks. So if, you were a great investor, a la David Tepper, you might have noticed that and, sold your U.S. stocks and bought Chinese stocks. The China Terrific 10 was beating the Mag 7, but no one cares. Long China Tech was one of the least invested themes, and long Mag 7, everyone was doing it. So who shows up? Tepper. And I loved this. He was on CNBC and Becky asked, what happens if the tariffs happen? He says, I don't care about tariffs. Nothing happens. I'm buying such cheap assets and they're growing fast. I'm going to make a lot of money. So President Xi embraces tech CEOs. That was huge, right? He had been persecuting them for a while, locking them up, in some cases, not stealing, taking all their stuff. Bitcoiners like to chase hot dots. So they did that, and there was a lot of open interest in the CME futures. Now, that isn't all retail punting. That's actually a lot of the big millenniums and citadels and jump trading, et cetera. The consensus was that there would be a downturn around taxes, fall to 70 grand. Then we would start to rally in the summer and we'd head towards 150 by fall. Now, Metcalfe's law said that fair value was 95. Power Law model said 100K. The Power Law cycle was saying, hey, we're going to peak sometime in November, December, around 175K. The question was, well, what do you do? Well, up to 175, you should hold. This guy was saying, I should trim up to 300, but I won't. And if it gets above 300, I will. Those were pipe dream numbers. Bitcoin consolidated after a very big run in Q4, but it was looking like it was going to break out, which it did. We were in the boom cycle of macroeconomics, so things were looking pretty good. Dr. Copper was not convinced, and then boom, it broke out and started to go up right before the trade war. So gold looked like it had lots of things in its favor this year. Central banks were buying as if they knew something was going to happen. And, we said gold could hit $3,000. By the time we got, the ink dried on the piece of paper, it was almost at 3,000 at 29.36 here. Gold miners, man, they became free cash flow machines. They can produce an ounce of gold for about $1,400. So at $2,900, they were making lots and lots and lots of money. So we came into March saying, hey, the investment environment starting to stink. And you see it first when someone says, let's impose tariffs. We're protecting American products and jobs. Homegrown industries relying on government protection. They love it. The problem is they stop competing, right? It's, if your work's done for you, you stop working. So the result is more and more tariffs, higher and higher trade barriers, less and less competition. Then the worst happens. Markets shrink and collapse. Business and industry shut down and millions of people lose their jobs. This was Ronald Reagan from 1987. Crazy. But Trump doubled down on the tariff rhetoric, threatened a full global trade war. Now, market participants begged to differ. They thought that tariffs would raise prices, which they did. US CPI, though, was coming in pretty soft. And in fact, Truflation was saying we were heading for very low inflation, but they didn't know how serious he was about tariffs. Fed math wasn't mathing. It was tough to get, almost 2% GDP growth with minus 1.8 in Q1. But we'll see how the rest of the year plays out. Suddenly, everybody was talking about a recession. Recession odds jumped all the way close to 50%, but had drifted down a little bit because Fed said, don't worry about it. Global central banks, they were cutting rates like a recession was already here. The only time we'd ever seen this many rate cuts. Job cuts were spiking like a recession was coming. Maybe it was AI, maybe it was something else. Consumers tapped out, credit card delinquencies rising. Recessions, they don't really kill markets. Outside of either the global financial crisis or the dot-com bust, they don't really hurt you that much. And we were probably halfway through at that point. It was a 2001 redo. First quarter was negative, second quarter was positive, third quarter was negative, fourth quarter was positive. We ended up a little bit, about 1% for the year. We'll actually probably do better than that this year. The bond market nailed it. People were Long bonds were making money. In fact, they started buying call options on bonds. Hilarious. So J-Pow shifted back to Dove, 2 cuts for sure. M2 was growing again. Well, the Fed cut NQT, 100% chance. So everybody said they would stop shrinking their balance sheet, which is what exactly they did. So the poly markets are better than pundits because it's the collective intelligence, hive mind. Portfolio managers, highest exposure ever. That usually leads to bad outcomes. So markets did start to go down. Institutions panicked in March, started selling. In fact, they got to the lowest net long position since 2020. Man, that was fast. It went from the highest net long position ever to the lowest in 2 months. Not ever, but in 5 years. Smart money selling. Who was buying? Buy the dippers. So retail was in, and what did they buy? They bought the Lag 7. So Mag 7 shed 3.3 trillion, and they were just getting warmed up. Downside volatility was not unprecedented. We said that, it could get worse. It did. Valuations were getting cheaper, but they were still super high relative to the rest of the market. The risk was very concentrated. Smart money didn't like the tariff talk. Retail money, they just like to buy the dip. So Mag 7 CapEx was exploding. Now, if you think about that, if your CapEx is exploding, then your profits should actually go down unless your revenues are growing faster, which they weren't. Goldman, again, trend is your friend, not so much. The dollar started collapsing. I mean, literally collapsing. Trump threatened OPEC, saying you better, cut production. You better start producing. And they declined politely. And Goldman then cut their forecast. Now, oil prices collapsed since the Trump threat on fears of a global slowdown. And they didn't stop there. They kept going. Investors pushed oil stocks to that extreme oversold level. But then the bounce, as we talked about it might be, was pretty severe. I mean, classic double bottom, looked really good. MLPs just kept chugging along. Germany went full on complete stagnation. Ms. Lagarde cranked it up to 11, and the euro just got worse. I mean, the euro kept getting stronger and stronger and stronger despite nothing looking good in Europe. So I guess it was just their turn in the hot box, shall we say, in terms of this usually happens right after the WEF meeting. Some country has to have a strong currency for a year, and then they shift it the next year. So we'll see who gets in the hot box this February. Investors were piling in. Japanese GDP was stagnant. Didn't matter what. Leading economic indicators were declining. The problem was Ueda-san came in, the new Bank of Japan governor, and he was very different than crazy Kuroda-san. Kuroda-san was like, hey, I'm just going to lower rates. I'm going to make the yen die, and I'm going to get us out of this. And Ueda-san said, no, that's not how it works. I am an academic. I will fix this. Well, it didn't work. In fact, the yen started going up, and after decades of deflation, inflation came back. Is that necessarily a good thing? Corporate profits didn't think it was a good thing. And Japanese equities, where the head goes, the body follows, to quote my old wrestling coach. Japanese equities did not like Mr. Ueda-san. So China loses in the latest trade, loses the least in the trade war. U.S. is vying for biggest loser status on television. Another casualty of the trade wars was U.S. retail. Temu, right, basically said, forget you. You're going to charge tariffs? Then we're not going to sell you cheap stuff. And so retail was falling off a cliff. Chinese equities, on the other hand, were rebounding and were still super cheap. And the rail rally hadn't even begun because everyone was underweight. China stocks were actually off to their best start in history after their worst first few weeks, but a long, long way to go to fair value. Bitcoin just doing what it does. It's getting adopted. It's following the 30-year adoption curve. Right on schedule. You got the pre-tax day correction, but nobody expected that it would, or everyone thought it would go to the trough, but it never got there. But people were afraid. In fact, overall sentiment hit a near all-time low, despite the fact that it only dipped a little bit. ETF flows, which had gone negative because people need to pay their taxes, turned back to positive. And guess what? If you were a seller, you were selling right into giant whales, diamond hands. Active addresses had been a good buy signal. They said the shakeout was over, time to buy. Treasury strategies, there were over 100 companies, or 80 companies then, now 100. This one said that Metaplanet was up to number 10. M2 and M2 growth and Bitcoin had been highly correlated. So it meant that, April 30th, prices were going to blast off almost to the day. It got it right. 6 billion shorts got liquidated at 90K. Everything was looking good. And in Bitcoin, gold was looking even better. It hit the $3,000 target. We added $5 trillion in market cap, which is, 2.5 times BTC. Okay, fine. Gold did better over the past year, but what about 25 years? Oh, 25 years. You could have beaten the S&P by a lot, almost double, actually a little more than double, just by holding gold. No one did that. To summarize the report, you don't own enough. Investors abandoned gold and miners, but they were actually crushing it in terms of cash flow, and their stocks started to rocket up. They're up 38% by April. Gold miners had this beautiful cup and handle pattern. They were set for a very large move. Even I didn't think they'd go as far as they did, which I'll show you in a little bit. By April, it was tariffs everywhere. Will the economy sink? Every country must be in the interest of great body of the people to buy whatever they want and of those who sell it cheapest. Right? Adam Smith has been talking about this for 400 years. It's not rocket science. It makes sense to have comparative advantage. Tariffs were changed. They went kind of out of business in 1913 when we started doing income tax. Now we could abolish the income tax and go back to tariffs or something, or consumption tax, which would be better. We just need to get rid of income tax. But return of the robber barons, look, that was not welcomed. So the robber barons, it's not a nice term. So when they created the first robber barons in the 1900s, people didn't like them. So those who don't study history are doomed to repeat it. So only 3 times in history did we try tariffs. In 1828, which led to the greatest depression in the history of the U.S. in the 1840s. Then again in 1930, the second worst depression. And now the Trumpster. I'm not saying we're going to have a depression, but it's always been a bad idea. Contrary to the narrative, U.S. had the highest tariffs. Just let that sink in. Even before the tariff plan, contrary to what they told us, we had the highest tariffs of anyone in the world. Almost anyone. Australia and Brazil. Forget the extinct direwolves. Trump wants to bring back the robber barons. So this guy did a study of Trump's view of history, and it was kind of scary that it was basically saying, if I'm supported by this bunch of rich guys, I could probably make them even more powerful by following the same playbook that produced the original robber barons. Again, not a nice term. So Trump declared April 2nd Liberation Day. The Economist said Ruination Day. Market reaction, second worst in history. In this century. So the market did not like it. So China, last time he did this, retaliated with ag tariffs. And basically the tariffs that we collected, 92% went to the farmers to bail them out. No one really talks about that, but it's kind of crazy. The farmer bailout was definitely needed because of a collapse of trade. And that was what Trump was promising again. He says, look, I will take care of you, farmers. Well, why? Why are we taking care of the farmers and no one else? Why don't we just not do it in the first place? So Trump demanded that China make a call to do a trade deal. She said, keep waiting, not calling. So I got that song, Call Me Baby, Call Me Maybe in my head now. Trump responds with tariff elevation to Silly Town, 245%. And what happens? She says, no cargo for you. So they just basically shut down their ports. Worse, they said, you know what? We own all the rare earth minerals. Well, not all, like 90%. And you don't get any. So WTO basically said, if you guys can't work it out, everyone's going to suffer and we're going to downgrade global growth. Global investor expectations fell to 30-year lows. Equity market could have gone down 40%. Trump popularity was sinking. The last guy who tried tariffs did not get reelected. So maybe he thought about that. Economic indicators were basically saying we were in recession. NBER said, no, we're not. Okay. But economic data said we were in a recession. NBER said, no, we're not. BlackRock said we're in a recession. NBER said, no, we're not. Consumer sentiment, no level never seen before in history. We're in a recession. No, we're not. Job cuts spiking. Again, NBR just keeps saying, no, we're not. Mortgage rates surging, mortgage refis, consumers behind on car payments, credit cards, no one can pay their bills. So what do? They file bankruptcy. Bankruptcy filings at the second highest level in history, only worse in the global financial crisis. But there was this weird stat that retail sales in March went up. Well, yeah, of course. People were front running the tariff. So it pulled demand forward. And that does make sense. Mr. Market said J-Pow shapeshifted back to a dove. Jerome said, not yet. No cuts for you. Basically, Trump said, you got to cut 50 basis points. He said, not going to do it. So he did not cut in May. So Trump said, I'll just call you bad names on Twitter. And J-Pow said, I don't really care. The narrative was Trump was intentionally crashing the economy to try to lower rates, except rates went up. So that probably was a bad narrative. The bear market, it depends how you define it, but we were in a bear market for a day. We had record selling of U.S. stocks. Okay. Institutions and retail actually agreed for the first time and said returns were going to be lower. Smart money, institutions were selling. Dumb money, buying like crazy. But a lot of that is not really dumb. It is dumb. It's rule-based. It's not like people making a decision. It's just that their 401k is on autopilot and they have to buy. So by the BTFD had become learned behavior and everybody was buying the Mag 7. But again, that's just passive capitalization weighting and the indexes. Tariffs create uncertainty. Markets hate it. But when economic uncertainty, that's not EU like in Europe, when economic uncertainty peaks, that's actually a buy signal. And you'll notice there are no like permanent plateaus. There are only spikes on the right-hand side. So the toughest hedging decisions are when nothing has happened yet. So when you're in the green or even the yellow, that's the time to hedge. If you wait until you're in the red or the brownish, it already happened. So we probably had seen the bad event already at the beginning of April. So VIX spikes are a strong indicator that the risk off event has, past tense, already occurred. So stocks had gone down, but you couldn't call them cheap, right? At 23 times, still in the top quartile of all expensiveness. Average equity valuation model said 130%, 3 standard deviations too high. Buffett was 2 standard deviations. History basically didn't favor when you were down 15%. There had rarely been positive years, right? You had one in 2020 because of the stimulus, the money printing after lockdowns. 2009 with the money printing when Obama said, hey, it's time to buy stocks. And then in 1982, in between the double dip recession, there was a big fiscal stimulus. So barring the government doing something, it was not going to be a good year. So guess what? The government did something. So EPS estimates were collapsing at the fastest rate since lockdowns. They had to do something. Estimates were that, everything was going to go down. The Mag 7 had turned into the Super Lag 7, $10 trillion. $10 trillion. And then bang, Trump paused, said, okay, I'm going to pause. And 4 trillion in a day came back. So short squeezes can be violent. So the Mag 7 valuations were at those 2-year lows, still pretty high. NVIDIA still bouncing in ugly town. And the hits just kept coming. They were starting to look a lot like 2001 Cisco, even though people say they're not. We're going to find out later. I will predict we're going to find out later that they were cooking the books just like Cisco did, and they're going to have to restate a lot of earnings, quote unquote earnings. But we'll see. We'll see if that happens. Did Tesla have their equivalent of DeepSeek moment with BYD? It looked like it, right? BYD was going up on the right and Tesla was going down on the left, but then the government had to do something. So commodities looked like a pretty good place to be. Dollar was having its worst year ever. So pretty good place. Usually that's a good thing for commodities. And just like we predicted it would happen, it was heading down. Dollar gave back all of the 24 gains and was actually on the verge of a negative return for 10 years. It's amazing. Life comes at you fast. What a difference a few months makes. We went from the cover, the dollar's the envy of the world, to how a dollar crisis could unfold. You can't make this stuff up. I mean, it's amazing. Gentle reminder, just let this sink in. This may be the most important slide of the whole thing. 80% of all the dollars ever created in the 249 and a half years of the U.S. Republic were created in the last 5 years. 80% of all the dollars ever created. That's a big thing. So Trump threatened OPEC. OPEC declined. Production stayed high. So prices went down. Okay. Maybe that's what he was trying to do because there is an inverse correlation between gas prices and presidential popularity. I will agree that is what he was trying to do. He started talking about it later. Investors pushed oil stocks to very oversold levels. We thought it was a buying opportunity. It turned out to be. MLPs got smacked on Liberation Day, but they were still generating cash flow. Ms. Lagarde, I thought I had seen it all in kind of February, but she set it to 12, forget 11. She turned it up to 12. Yet the euro just kept strengthening. It makes no sense, right? No sense. European stocks just kept surging. European bond market just kept going up. In fact, no one, and I mean no one, had emerging markets and peripheral Europe as the best performing markets in 25. No 10 surprises pundits had that on their bingo card. No way. Ueda-san, I love this guy. He, in the face of just being wrong, doubled down or up on his rate hike policy and basically undid all of Abenomics, and the market just kept going down. So China, on the other hand, said, hey, bring it. We love a weak currency because we like to sell stuff. Chinese equities bounced. They got punished on Liberation Day like everybody else, but they bounced harder. A shares a little bit less. And then Bassett came out and said, we're going to delist all Chinese stocks. No, you're not. I mean, they've threatened that, I think, every year that I've been at Morgan Creek. I mean, I'm literally not making that up. I could probably find the data to show that. The other casualty was the Temu effect. Temu guy said, you know what? Fine. You put tariffs on us, we'll raise your prices and we'll see what your voters say. So China's exports, they don't rely on the United States. They have become globally dominant exporters. And that's why they don't care, nor does David Tepper, about U.S. tariffs. In fact, the U.S. press just gets it completely upside down. What they say on the left is the opposite of the right. It's just, I love when people, despite the facts, continue to say something that maybe they don't know it's wrong, but they have to know it's wrong if they actually read. So rare earth minerals, just one example of many where the U.S. is entirely dependent on China. That slow realization has led to flip-flopping, but worse than flip-flopping were the exemptions. Oh, well, we won't have Apple be included, or we won't have, this other company be included because people put pressure on him. Well, Trump fancies himself a master negotiator. He thinks he holds all the cards, but she says, but we make the cards. So we have a stronger hand. The history of money is replete with fiat devaluation and deconstruction. The average life expectancy for a fiat currency is 27 years. Let's let that one sink in for a second. All right. So it's gone down 99.95%, the British pound, which is the oldest currency, 317 years. So Bitcoin is the first time that we don't need physical space to store it, no courier to carry it, no bookkeeper to count it, no auditor to check on it, no security guard to protect it, and no government to issue it. That's why they hate it. Gold's been money for 5,000 years. Homes have been a store of value. Bitcoin's better. Bitcoin is a better store of value. Big Mac Index has been one way to monitor theft of purchasing power. They've been stealing our money. But if you look at the left-hand side, yeah, a Big Mac cost $3.53 in 2010. It was less than $1 when I grew up. Now it's $5.69. It cost you 42 Bitcoin in 2010. Today, it's fractions of a Bitcoin, just a few Satoshis. Interesting. And what you used to get when I was growing up, beef, lettuce, pickles, onions, cheese, sesame seeds, 12 beef patty, special sauce, lettuce, cheese, pickled onions on sesame seed bun. Now you get high fructose corn syrup, citric acid, natural flavors, potassium sorbate, aluminum sulfate, ammonium sulfate. None of these things you should put in your body, but we do. This is a really interesting construct. Bitcoin as the ultimate retirement savings tool. Basically, it says, how many Bitcoin do you need to basically retire your family? So back in 2016, you need 2,380. By 2024, you need about 42. Today, somewhere around 22, ish. Call it, 1.5, 2 million US dollars. And by 2040, maybe only 1.3. That's a really interesting metric, right? How much does it take and how protected are you from fiat fiasco? So Power Law still said 170 back in the summer. We thought crypto winter would come a little earlier than everybody else did. Unfortunately, it did. Gold blew right through the target and was going vertical. Gold miners, holy moly, they were up to 60% by mid-year, and they were just getting warmed up. So in May, tariffs everywhere at this point. We could all use a drink. And then, so we said how it started was, anyone stopped to think. Then how it escalated, is the environment starting to stink? How it's going, will the economy sink? How it ended, at this point, we could all use a drink. So basically, Donald said, they stole our jobs, they stole everything, and we have to do this. And Xi Jinping said, look, there are no winners in tariff wars or trade wars. Bullying or hegemonism only leads to self-isolation. He's the adult in the room? That's kind of wild. So all we need was some good old-fashioned backroom deal-making. Very good meeting today. China agreed to roll back the tariffs for 90 days. Boom. So no more tariffs. Funny how deals are often announced on Sunday when the markets are closed, yet someone on Friday made a big bet that this would happen. I don't know. Maybe it's a coincidence. Not the first time Donald told people that equity positive news was coming. He basically tells us when he's going to do it, which is kind of wild. No one ever believes him. So April Fools, no trade war. We made big, beautiful deal like a rocket. Everything goes up. U.S. China agreed a 90-day roll-off. They're still high at 154%. down from 120, but it's better than it was. Lots of celebration for lowering tariffs back to the level, right? Before Liberation Day, they were 3%. So it's kind of a Pyrrhic victory to say 54% is good or 34% is good, but everybody was celebrating. Still a tax, any way you look at it. And despite winning, we were back to 30s Smoot-Hawley level. That doesn't sound like a win. The big question is the damage already done. That was interesting. Amazon and FedEx were the canaries in the coal mine. They had rolled over and looked like they were starting to recover. Walmart said, hey, we're going to have to raise prices. Crisis averted. JP Morgan said no recession. The average American said, we're still pretty pessimistic. Third most pessimistic we've ever been. The problem is Americans are in serious financial distress. They're behind on everything: student loans, credit cards, auto loans, revolving debt. And the percentage of people at 90 days was worse only in the dot-com bubble. So the problem was we were supposed to be lowering treasury yields and they just went up. So that was bad. The Fed, was saying they were going to cut rates, but they didn't get around to it. So global money supply was going vertical everywhere. So it was only a matter of time before the U.S. decided to jump in. Said the bear, we hit down 20% for literally one day, and it was off to the races because the tariffs were canceled. Hedge fund managers had to cover. Now, they stayed a little short, which is why they're underperforming long only this year. Institutions, most bearish ever, yet put call ratio at a record low. If the institution selling, who's buying? Guess who? It's the same people. Mag 7, lag 7, but they got all the way back to even. Incredible. I mean, DJT fixed it. He kicked in bigly, short squeeze, masterclass. Everything was back to where it was. Make the robber barons great again. If you look at who went on the trip to Saudi, there are no small companies. There are no, good American middle-class companies. It is all the big dogs. Interesting. Everyone piling on short dollar trade. When everyone's on one side, goes the other way. Guess what? Dollar caught a bid in May. Oil prices, which had been collapsing, suddenly caught a bid. Oil stocks just continued their relentless move up. MLPs went up. Even European, the overweight Europe was the highest it had been in over a decade. European stocks up way more than everything else. And the European banks on the right-hand side were completely en fuego. I mean, they were on fire. Ueda-san, he was not messing around. He just did not want this to happen, but even he needed to give in. So he flipped the switch at the end on Earth Day, and the yen started to go the other way, started to weaken. And therefore, the Topix had its best 2-week gain. It had never gone straight up for 2 weeks ever. So temporary trade embargo didn't do anything to lower exports. The U.S. just printed dollars, sent them to Asia to buy stuff, and they bought bonds. What did China do? China invested in tech innovation. Now they dominate in everything from 5G to AI to electrical machinery to digital communication to measurement to thermal technology. They dominate everything because they invest instead of spend. Trade war volatility, Chinese stocks up way more than the U.S. Bitcoin rallied bigly and was up to double-digit gains. 98% of the wallets were now in profit. Bitcoin followed the wick-off pattern. No sellers, lots of buyers, and life was good. We're heading right back for that triple-digit peak in that 150 to 170 range, or so we all thought. Coinbase looked prime to move even before S&P inclusion, and boom, it surged all the way back to $300 ultimately hit $420. Humans always buy what they wish they would have bought. So ETF inflows into gold right after, and then gold rolled over. Long gold's most crowded trade by far, most overvalued in the history that it had. So by June, we called it the never-ending story. Are the Trump tariffs actually terminated? We had the taco theme, Taco Tuesday, where Trump always chickens out. So they have never-ending story is this book about, as you would expect, a never-ending story. It just goes on and on and on. The setup, the response, the attack, the resolution, the epilogue. And we've said tariffs reduce growth and prosperity. Okay, that's pretty clear. In typical Trump fashion, he's threatened take it or leave it ultimatum, but then he chickened out. And why is he chicken out? Because he always chickens out, because he doesn't really want to do the tariffs. He just wants to talk tough and get positioned appropriately and then chicken out and the market rallies. So why? Because the tariffs would be the largest tax increase in history. In decades, not in history, since 1968. That would be bad, especially for voters. And there was a lot of fake news about tariffs and what was actually done and what wasn't done. The reality is the White House said Trump liked what he heard, but he wasn't even in the room. So, as usual, there was a lot of stuff being said. Things are a little murkier than, and so we didn't know if trade tariffs were on or off. Export activity, though, no signs of slowing. Equity markets, they were a little less sure. Would you like a side of lies with your taco? So the world basically called Trump's bluff. That said, you had to acknowledge that the markets had come back from Liberation Day levels. That was true. The issue was now we were back to really ridiculous valuation levels. The U.S. broad in number at 21.7 there on the right was in the top 5% of history. So what do? You threaten a war. So people love war for some reason. I don't know why you would love war. I'm sure markets love war, not people. Markets love war. So markets didn't like the no deal. Rattled a few sabers, markets jumped. Polymarket said no chance of recession. Jamie Dimon said no, there could be. I don't know why he said that. Well, he said it because the PMI was at recession levels. Services PMI was reaching levels we had never seen. Job market continued to get worse. The worst part was most of the jobs in 2024 didn't happen. The Bureau of Labor Statistics basically made them up, 900,000 fake jobs. One might say they did that to try to get a candidate elected, but I just think they just are bad at their job. M&A activity plummeted, reflects policy uncertainty, LEI collapsing. Look, we've never seen LEI decline at this level when the market's been going up. It just doesn't happen. Everyone was crowing about low inflation. 2.4 is still higher than 2, last time I checked. The VP accused, I love this, right? Monetary malpractice. And so what does Powell say? Hey, no cuts for you. So fine. So here we were in June, still no cuts. Everyone was saying we're going to get 2 cuts. We actually ended up getting 3. So still hoping for 2. Despite all the rhetoric and no cuts, money supply was still growing. Well, how is that happening? Well, there's repo activity and there's Fed balance sheet. So money supply was still growing. And the dollar, well, I'm sorry, not the dollar. Why was the Fed sweating? Because the interest costs were totally out of control. I mean, look at us relative to every other country in the world, net interest to GDP. This is not sustainable. So the whole world was dependent on expanding money supply. Probably shouldn't bet against that. Bear out ICO for one day. Taco trade was back. Now, the question was, were markets up because pension funds were buying, or were pension funds buying because markets were up? Probably more the latter than the former, but DJT, he fixed it. Hedge funds piled back in, but who could blame him? Mag 7 are beautiful. companies buying their own stock like there's no tomorrow. Highest buybacks ever on the left-hand side, that black line. Well, who are they buying them from? Insiders. Obviously, insiders don't sell at bottoms. So why are insiders selling to themselves? I don't know. So long-term secular dollar decline, weak dollar, gave back. I mean, it was in total free fall. I mean, we turned negative for 10 years, actually. Oil was collapsing, but when the taco trade happened, oil prices started to go back up because they thought the economy was going to get good. Oil stocks did great. MLPs did great. European stocks just continued to surge. Again, no one said that, Mexico and Colombia and Chile would be the best performing markets. Just didn't say that was going to happen. Japanese market came all the way back because the yen was allowed to weaken. China just kept going up. Look, Michael Saylor had a very important message for investors at the Bitcoin event. He gave 21 truths about Bitcoin, that it's more than just this, digital currency. Following the adoption curve, how big is it? It seems big at 2 trillion, but relative to 1,000 trillion or a quadrillion dollars of total assets is pretty small. Life was pretty good in June. We were following the path. Everything was looking good. Top Bitcoin treasury company, MSTR, had beaten all of the Mag 7 by a lot, and it wasn't close. And more importantly, it had tripled the return of Bitcoin. Well, how did it do that? Well, it does it through an interesting combination of leverage plus financial engineering. And it's this flywheel effect that was really quite good. Metaplanet was running that same playbook. It was top performing stock. Humans, they were lining up to buy gold just in time for gold to flatten out. By end of summer, we said we'd give an update on global markets. Sell in May and go away was the thesis, but that wasn't working. Recession basically had disappeared. GDP was rising. Manufacturing was saying we're still in recession, but no one believed it. Jobs were saying we're still in recession, but nobody believed it. Leading economic indicators saying recession, but nobody believed it. Loan delinquencies, no one believed it. Everyone piling on Powell. Trump says the U.S. is booming, but we need a 3% interest rate cut. Just let that one sink in. If things are great, why do we need to cut interest rates 3%? I mean, that's just a dumb statement. I mean, one of many dumb statements. But despite rumors of resignation, Powell says no cuts for you. USM supply kept growing. And when the dollar is growing at 2 times the rate of gold prices are going to rise. When it's growing at 5, 6, 7 times the rate of Bitcoin's going to go up because those assets don't change. 1 ounce of gold, 1 ounce of gold, 1 Bitcoin's 1 Bitcoin, what changes the amount of dollars you need to buy them. So despite all the rhetoric, financial conditions are actually really easy. Interest rate, burden, gold money supply, all the same things we just reiterated. Look, the last time interest rates were this high, global financial crisis ensued. Not saying that was going to happen. The Fed unwound some QE at a huge loss. If the banks tried to do this, most of them would go out of business. Market, though, didn't care and just kept rocking on. Everyone jumped in the pool. We're on pace to set a new record for inflows into U.S. equities. If long stocks are good, levered long must be better. Everybody loves stocks. NASDAQ's up. Even small cap stocks were up. It was crazy. So EPS, they told us things were going to be great in December. Then they told us they'd be less good in June so everyone could beat, lower the bar to the ground and then jump over it. The high jump champion. Valuation, it's just silly town. I just too many numbers here to go over. Retail investors YOLOing into meme stocks like Avia Technology or Avis, Carvana. I mean, companies that basically are on the verge of bankruptcy, but no one cares. Hims, Palantir, Carvana, SoFi, Netflix. The cruddier the company, the better. The more overvalued it was, the better. Everything was going up. Long-term dollar, though, on its way down. The worst year for the dollar in 100 years. So we've talked about that. Now, the Genius Act was passed. This is really kind of tricky. If the dollar is hurting and nobody wants to buy our bonds, why don't you create a new thing that would buy your bonds. These stablecoin things, we like those. Tether, they're dodgy, but hey, we could partner with them. We could let Treasury Secretary own part of it, and then we could have them become the 8th largest buyer of treasuries in the world. It's actually a pretty interesting plan. So Tether now is the 8th largest owner, or no, I'm sorry, 7th largest owner of treasuries in the world. But Cantor does own 5%. That's a little dodgy. Two big winners at Genius Bill, Coinbase and Circle, both surging on stable coins. And I know I'm over a little bit, but so I will try to hurry up. Oil stocks kept going up. MLPs, European stocks. Let's keep going. Bitcoin ETF surge. Bitcoin's back to new all-time highs. Money supply, all that good stuff. That's all stuff all you've seen before. So, so much for sell in May and go away. The relentless summer melt up. Everything was great, so we had to cancel the sell in May and go away. Update on global markets. Look, we've been talking about the taco trade for a long time. Trump says the art of deal, there'll be no deal, no extension. So after everything was rallying, he said, no, we're going to keep charging tariffs. But then, of course, on a Tuesday, he delayed it for another 90 days and markets went crazy. He said we're taking in trillions on tariffs. Well, billions. I mean, not trillions, but billions is a lot. But if you don't eat, buy healthcare, pay utilities, tuition, or rent, there's no inflation. 1 year apart, price of this meat is not 2.7%, but 50%. Perhaps tariffs are a tax after all. That was interesting. GDP did contract in Q1, but rebounded sharply in Q2, despite the fact that, all the indicators are still negative. And, Atlanta says party on, Garth. Consensus is less sure. Still no Powell resignation. PPI comes in hot. Still waiting for 2 rate cuts. They finally did get one in September. And then 2 more in October and December. Last time we saw the global financial crisis. Bond markets had been struggling. Now, Buffett had accumulated cash like it was going out of style and was trailing the S&P. So what does he see that no one else does? So why? Market's going straight up and he's still got, 35% of his market or of his holdings in cash. It's interesting. S&P making new highs every week. Everybody loves stocks. NASDAQ was up. Earnings, not so much. Valuations, really bad. So we've done all this before. Same stuff. Oh, so this one was interesting. So he did this surprise announcement of copper tariffs. So copper prices went up the most ever. Again, someone the day before knew about the tariffs and made a lot of money in copper, actually the largest copper trade in the history of the copper market. And then he rolled them back and copper prices went right back down. It's just kind of wild. So willing suspension and disbelief. I gave a presentation back in 2019 saying why unquestioned faith in central bankers may be misguided. And basically said, he summarized it best. I remember a time when they didn't know the names of central bankers. I long for those days to return. And there's no answer to the available literature why government monopoly provision of money is the university regards as indispensable. It has all the deficits of all monopolies. A man with a gun can rob a bank, but a man with a bank can rob the world. And central banks are supposed to be the lender of last resort. Okay. Well, where did it come from? Well, the first one was created in Amsterdam by some interesting families in Europe. And that's why the Netherlands was able to conquer the Spanish Armada, despite being the size of Ohio. Then a bunch of those families moved to England and created the Bank of England. And then some went back and created Swiss National Bank and then the European Central Bank. And then the Bank of Japan jumped in, and then the People's Bank of China. Everybody wanted a central bank, except the United States. So the United States had National Bank, First National Bank, and the Second National Bank. Then Andrew Jackson came along and said, I hate these banks because they're owned by these European families. So we're going to not renew the charter and we go to free banking era. So everybody had to issue their own money. So Texas had money and companies had money and the Confederate, everybody had their own money. it led to the worst depression in the history of the United States and the Civil War. And so they reversed it. And then JP Morgan rose, and he was trained in Europe at the Bank of England. His dad was friends with one of the Rothschilds. And he came back and said, I'm going to start this bank, but there are these pesky trusts that I don't like. So we'll spread a rumor, and the famous run on the bank scene where he got the Knickerbocker Trust to go out of business because he liked a little competition. So then his best buddy, John D. Rockefeller's father-in-law, created the Aldrich Plan, and they came up with this thing to create the creature from Jekyll Island, the Fed. And Thomas Jefferson was right. I believe the banking institutions are more dangerous to our liberties than standing armies. If the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations that will grow up around these banks will deprive the people of all property until their children wake up homeless on the continent their fathers conquered. That hits hard. That just hits hard. So central bank bubbers have been, working overtime from 1776 to 1913, dollars worth a dollar. Then it went down. And then, around the Depression and the war, it went lower, but it still was worth a dollar. Now it's worth a lot less. And so bottom line is global central bankers were acting like there was a crisis. Government bond markets acting like a crisis. QE stimulus was necessary. And in 2019, there were these unicorn IPOs. And companies that had no earnings and no business being public went public, and they all went up a lot, and then they all kind of went to zero, because it turns out going public if you don't make money is a bad idea. WeWork was the poster child, just a dumb story and a dumb valuation. And no one can pay 10 times sales for a stock. Scott McNally said it in the global financial crisis. In the dot-com bubble, and there were a bunch of companies back in 2019 at 50 and 30 and 20, and they all went to zero. So tech investors clearly lost their heads. And look, why buy FANG stocks when you can buy cloud stocks? Well, but they all went down. Beyond Meat was beyond belief, and it went from $80 to less than $1, basically zero. And, up in smoke, the cannabis companies went away. Bitcoin, on the other hand, right? One Bitcoin is always one Bitcoin. It had done terrible in 2017, but it looked interesting in 2018, looked like adoption. Laid it off protest too much. U.S. money supply wasn't going to grow, but it did. So Bitcoin tripled in 2019. Interesting. So that leads us to where we are today. So Polymarket says, nope, no recession in 25. So 33% chance next year, because if it didn't happen this year, maybe it'll happen next year. U.S. GDP appears strong, 3.8%. But if you take out AI CapEx, there was no growth in the first half. Hyperscalers are hyperspending. The problem is it's all circular, all buying stuff from each other. So OpenAI is committed to spend $1 trillion with all these companies, but they don't have $1 trillion. They don't make money. They lose about $8 to $12 billion a year. So the only way they can make money the only way they can get money is to raise it from people. So they sold some of their own shares to people like Masa-san, who already owned a piece. So he's pumping up his own stock price. It's a Ponzi that goes beyond Ponzi, actually. You have to suspend disbelief to think this is a good idea. ISM still below expansion. Services got out of the danger zone. Leading economic indicators still ugly. People are hurting bad at the lower end. In fact, so bad that Hamburger Helper is back at the top of the sales charts, despite the fact that the Atlanta Fed says, we're growing great. We got one more J-POW meeting, one more rate cut left, 3 this year, probably 1 in January. Despite all the rhetoric, M2 is at a new all-time high. Dollar just keeps getting less good. You want to own stuff that isn't denominated. It's all because of this on the left-hand side. $1.8 trillion of deficit spending. So we didn't drain the swamp. We just moved the pieces around. So China makes us look like an amateur. They're printing money way faster than we are. So don't fade global liquidity. Bonds had been struggling, but now they're back up 5%. Probably an interesting hedge. Mag 7 be doing better than triple Qs, doing better than the S&P, doing better than bonds. Taco has been extreme. Trump chickened out, and it's been great. The meme stocks, Robinhood, SoFi, Tesla, ARK, look, it has been awesome since April. Not everything was up. Transports were down. Now they finally did turn around here in October. I mean, that is a wicked rally off the bottom for FedEx and UPS. Healthcare has been fantastic since August. Biotech, even better since April. So it's been interesting. Earnings, new all-time high, unless you're a small cap company. Valuations, still crazy. Still, all the red dots on the red dots say just how crazy. It's never been this crazy. I guess it could get crazier. But this is where it's crazy, crazy. So the Mag 7 valuation is on the left, 40 times EV to EBITDA. Okay, that's just silly. But these companies on the right, I mean, SpaceX floating a number of 1.5 trillion, which is over 300 times revenues. It's just dumb. It's so obscene. Like OpenAI at 500 billion on losing 8 billion. It's obscene. And people who are buying these, I think, are going to lose extraordinary amounts of money. But we'll see. Buffett isn't buying into it. He's, licking his chops, waiting for the market to go down. Hedge funds are selling. Triple Q had not closed below its 50-day moving average for 180 days. That streak broke in November and now broke a second time. And we're still below it. That's interesting. Mag 7, that's so yesterday. It's all about these AI companies like Broadcom and TSMC. I wish people luck buying them at these valuations. I mean, they make the dot-com bubble look prudent. Yet AI use is actually rolling over. So, the LLMs, people tried them. They didn't really improve productivity, so they're not really using them as much. So, we'll see how this plays out. The infinite money glitch, it caused everyone, including myself, serious cognitive dissonance. But it doesn't work, right? OpenAI announced this deal. Oracle went up, and now Oracle's lower than where it was. They announced this investment in AMD. AMD is on its way back to being less than it was. So it sounds good that they're going to buy a bunch of your stuff, but if they don't have any money, the quantum guys are nearly as bad. And yet Trump threw $10 million bone to them. Didn't really help, but helped for a couple of days. Dollar decline, it's just getting crushed. They will save it, though, by the Genius Act. Ethereum, long-term, it's a winner here. Short-term, it's looking kind of ugly. Figure, one of our portfolio companies, play on tokenization. This is a big trend. This can be a great company over the long term. We're psyched about it. Oil, it's just collapsing because it's basically telling us that the economies are getting less good. EIA nailed it. They finally changed their forecast and said oil prices would go down, and they nailed it. So bravo. It's the first time I've seen them change an oil forecast in a long time. Oil stocks, they kind of are stuck. Oil services, turns out they're still doing well. And MLPs still 13%. European stocks, European financials, I mean, this has just been a rocket ship ride. It's amazing. Still, no one had Greece and Spain and Italy at the top of their leaderboard. Japan has been doing great. The yen got decimated, went from 140 to 154. So Ueda-san got his comeuppance. Somebody probably from the Yakuza paid a visit. So I shouldn't spread rumors, but somebody said something. I should say SoftBank, not SoftBank. I say there's always three typos. Japanese tech stocks have been better. Chinese stocks up 2 times more than the S&P. Animal spirits are back. Baba, Tencent, Baidu, KWeb, all doing better than the S&P and Triple Q. Bitcoin, definitely something happened on October 6th. We hit the 311. That means 3 years, 11 months to the day. Hit a peak. I will argue we're in a bear market, although this kind of looks like a double bottom, right? We have another bottom with much lower volume. So we'll see. There are those that say, hey, it's just got a lag and it's going to catch up to gold and money supply. I believe that, and it happened in April. There are those that say the 4-year cycles or 311 cycles over. I don't really buy that one. 100 firms now buying MicroStrategy despite the slump. This is crazy. Despite a pretty big, again, up 50% of their gains, are still ahead of NVIDIA, Tesla, Google, Meta, et cetera. So they do it the right way. Metaplanet's going to do the same thing. Gold has been fantastic, crushing stocks. People are buying at the wrong time. I don't like that. Gold miners, look at that, 150 and 160% for gold miners. Incredible. All right. 23 minutes over, not too terrible. These are the webinars and the podcasts. No time for questions, and no one asked any questions. Good, I'm off the hook. So I will wish everybody happy holidays. I hope everybody has wonderful time with their families, safe travels wherever you're going. We will be back in the new year with the surprises. And thank you for all of your support and partnership and friendship this year and every year, and for all these years of the 21 years we've been doing this. And thank you very much. Take care.